This is the Daily Market Comment by Harlan Bospiceros. I'm Maria Bashardis. Thanks for joining us at XM.com. The US dollar slid against most of its counterparts on Thursday, but it seems to be regaining ground today. Following hawkish remarks by Fed Governor Waller last Friday, investors became more confident that another hike will be delivered in May and scaled back some basis points worth of rate cuts by the end of the year, allowing the greenback to start eyeing its first weekly gain in nearly 2 months. Having said that, though, the rebound in the dollar this week clearly does not signal the start of a stellar comeback. Data did not allow recession fears to ease, with the latest releases prompting market participants to start pricing in again around 50 basis points worth of rate reductions by December, with more cuts to follow during 2024. Yesterday's data showed that initial jobless claims rose again last week, with the figure for the prior week being revised up, adding to the notion that the labor market is gradually cooling. In contrast to the Fed, the ECB's forecast to deliver around 75 basis points worth of additional rate hikes and not to touch the cut button this year. In a speech yesterday, President Lagarde said that Eurozone inflation is too high and that monetary policy still has a bit of a way to go before bringing inflation to heel. Once again, her comments corroborated investors' expectations, and thus any setbacks in eurodollar are likely to stay limited and short-lived. The divergence in monetary policy expectations between the ECB and the Fed could result in another break above 110.35 soon. The yen is the only currency against which the dollar is failing to gain today. Perhaps the Japanese currency attracted safe haven flows amidst concerns about the state of the U.S. economy, but it may have also received support after Japan's inflation data showed that the month-over-month rate of consumer prices rebounded to 0.4% from minus 0.6%. All three of Wall Street's main indices slid on Thursday following disappointing earnings results from Tesla and AT&T. Worries about the performance of the U.S. economy could continue weighing on equities, but it still seems unwise to call for a bearish outlook in the longer run, as expectations of lower interest rates in the U.S. towards the end of the year may allow some investors to stay in the game. This is today's Daily Market Comment. Thanks for joining us at XM.com.